It is important to understand that futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. For more information or for a copy of the full CFTC risk disclosure, please visit this link. Also, please remember that these training sessions are not a solicitation or recommendation, simply educational in nature. Thanks again for joining us today. Without further ado, it's my pleasure to welcome to the NinjaTrader webinar room, Justin.
Perfect. All righty. Well, hello, everybody. Thank you to NinjaTrader and everybody that works at NinjaTrader for helping me promote my services and give me this platform. So without further ado, let's go ahead and just get started here. So today I'm going to share with you how I find and trade around market rotations, and I hear this a lot in trading. They say, who said you can't pick, they always say you can't pick tops and bottoms, but that's kind of essentially how I trade. I wait for the market to get to a major top or a major bottom, and I find my entry when that happens. So I'm going to share with you today how I do that. If you need to get in touch with me, guys, www.sproadmap.com. You should find a way to contact me on that website, or you can always, I'll share my email as well, but that would be the easiest thing. Just go to the website, find out how to contact me through there, or send me a chat right on the website. It does have a chat bot, so that does come directly to me as well. So again, I think we just heard this. We've got futures trading is obviously extremely risky. You can lose all or more the money than you started with, et cetera, et cetera. So I don't really have to spend a lot of time here. If you want to kind of fall asleep, you're welcome to read this on the recording. So let's jump through here today and look at what we're going to do. So I would like to show you why multiple time frame analysis, specifically divergence analysis, is an extremely powerful tool in your trading arsenal. I want to show you how I narrow down and identify areas in the chart that make sense for market reversals. That's kind of the first part of the puzzle here, and show you how to trade around those areas and make a case for why you can indeed trade market tops and bottoms. So let's go ahead and jump right on in. This presentation, I didn't spend any time talking about myself or anything. I have so much information to share, and it seems like almost every webinar I do, I don't have enough time to really share with you guys exactly everything that I want to. So we're just going to jump into it. I've done multiple presentations with NinjaTrader and other services you can find online, or you can go to our YouTube channel. Just search the S&P Roadmap on YouTube, and you'll find all of our videos and stuff. So let's jump in. I like to use RVI, and anyone who's been in these presentations in the past, they already know I use RVI. I've mentioned it every single time in the past. Very similar to RSI. And I like to think of things in terms of short-term, medium-term, and long-term rotations. So what does that mean? That means when I'm comparing my time frames, I want to compare 2 to 3 time frames in a row. So for me, my shortest time frame is a 512 tick chart. That tick chart might act more like a 1, 2, 3, maybe even 5-minute chart on the off hours, right in the overnight session, maybe in the pre-market. But once the market starts moving, that 512 tick chart essentially can work almost as a couple second type time frame, right? Because it's a volume chart, but the volume picks up obviously once the market opens, and these candlesticks can print nearly every few seconds, right? So I go from the seconds chart, if you will, the 512 tick. On my next time frame I look at is the 3-minute. That seems to be a great time frame to iron some of the messiness out, and using the signals on that 3-minute time frame, it'll help me to identify areas where larger rotations make sense. All right, when you're looking at a 512 tick, That's a second chart, right? We're seeing a candlestick sometimes every second, sometimes every 10 or 15 seconds. So the signals and the noise that you're going to see on that type of chart can chop you up, right? So you use a 3-minute kind of acting like a filter, and that will help me to limit the amount of trades I take during the day and help me to narrow down one specific area in the chart where a rotation could happen. I can then start to incorporate higher time frames going into the 15-minute chart, going into the 15, 30, and hourly. And then for my daily reviews that we do every morning, we do have a trade room where we meet 30 minutes before the open and we talk about this stuff and we lay out what is lining up for the day. And we specifically look at the 1 hour, 4 hour, and daily time frames. We'll look into that. I want to get through all this kind of stuff, just the basics of what I'm going to talk about today, and then get to the charts so we can actually look at this on, a real market. So not so that it's not just all theoretical. And then finally, if you really want to look for major market moves, you can implement that weekly, monthly, and even quarterly time frame. Quarterly being a chart that prints a candlestick every 3 months, right? And it just so happens we are in one of the biggest sell-offs in S&P history, and should say at least in recent times. And we had signals for that on our charts, and I was talking to my members about this basically ever since about the beginning of December, going into the new year here. Going into December, as we came up to that top and pulled back, I had all the signs, and I told my members, and I warned them, this could be a multiple 100-point, it could be 1,000-point, it could be more than 1,000-point pullback that we're looking at here. So we'll look at that on the charts. The other important part of this whole picture is finding the market structure. So I don't, other people might use market structure and mean something else. When I say market structure, I mean finding the major scaffolding in the market, the areas where the market seems to hold on pullbacks and reject when it's pushing higher. So we're going to talk about finding those structures. Again, I typically call it a scaffolding of the market, and you'll see why when we jump up to the actual charts here. So we want to map these out on our charts. That way we know the major areas of support and resistance on short time frames. And I do that by building these levels out on the 1 hour time frame and above. I find the 1 hour time frame seems to iron out against some of the weeds on the shorter time frames, but gives you enough resolution to find those very relevant rotations in the market that turn for, 20, 30, 40, 50, 100-point pushes. So that's it. Now we're going to jump to the charts and really get into the meat of this presentation. So I'm going to pull up my 60-minute time frame to start. And the first thing I really want to talk about here is how I find these, what I'm calling scaffolding levels in the market. So what you see on the screen right here is down below. This is what's obviously happened here in the last couple of days. We sold off 400 points. We bounced 300 points, sold off 300, bounced another 400, 500, 600. It's been a real roller coaster here ever since the Trump tariff announcement up top right here. This is the hour that Trump started making his presentation for those tariffs, and then we started this major sell-off. So let's zoom out a little bit just to let you know, and this we can hide this off the chart. This is not relevant to what we're talking about. We can also hide this. This is a retracement of the sell-off from the tariff announcement down to the low that it made. And interestingly enough, guys, just to kind of go off basis here for a second, we're rejecting right at the 50% right now, or we were before they went ahead and hiked through it yesterday. So let's go ahead and take that off the chart for now. And I want to show you that these levels, this level right here, 48.61.5, this level right here, 50.57 this level right here, 52.87 These were on the chart before the market ever sold off. In fact, all these levels that you see on the chart here, here's some more detail. These were all built out on the chart before the market ever traded into these areas. And if you notice, and it might look a little messy here, but a lot of the major swing highs and major swing lows are coming right into these areas. And we'll look at this. You can see it kind of all over. For multiple days in a row, what was the low of the day? Right into this major scaffolding level, right? And it holds and holds and it holds, and it rejects right at the next scaffolding level, and on the way up, rejects off that first one, rejects off the second one, comes right up to the third one, right? So these levels are all built out onto the chart based on what price is done in the past. So first of all, once you have your hourly chart up, you now want to load the data for however far back you have on whatever platform. On NinjaTrader, we go back to, I believe, 2009. So I can load data. If I was to go up, say, to a yearly chart, I can go all the way back to 2009 to see what has happened on the futures market since then. So on the hourly here, I can go, if I wanted to, all the way back to 2009, but it's not relevant because price is obviously thousands of points above where it was back in 2009. So what's relevant to us coming into this year now that we've actually sold off, is pretty much somewhere right around from, say, 4,000, 4,500 up to the highs of last year. That's where price has actually traded during that time. So I can go back, and just to show you here what happened off the levels here recently, again, pushing 400, 500, 600 points, coming right to 55, whatever that is right there, and failing. These levels, if you go all the way back and then again selling off 1,000 points from the all-time highs, coming right down, and interestingly enough, for the last 2 or 3 days, they have not been able to get through this major scaffolding area. If you scroll back and we go all the way back to the last time the market was trading around 4,800, 5,000, 5,200, you can see here that these levels, I drew these levels based off of the price action in the past. So all these levels are built out based on major market rotations to the upside and to the downside. And you can see that I erased a bunch. You're not going to get every level because I do kind of have a service where I build these levels out for you and my members get them. So I'm not going to give you all of them, but you can see very clearly that some of the most major rotations, major 100 points, hundreds of points pullbacks, bam, right to that level. Pushes a couple 100 points, comes back, bam, hits that level, and we get the pop, right? That's like a 20, 30 point pop. Then they fail through. Then they get back through it, come back later, fail a couple 100 points, right back to it, give it a kiss, and then push up. And then you can see get up to the next one and hold above that, etc. And so, we even push all the way up, all the way up, all the way up, bam, right to a level and fail. So that's what I do is I'm not going to give you all the details here. We don't have enough time, guys. It would take me an hour just to go through how I actually pinpoint these levels down to the very tick, such that when you come over to the future, and again, we'll just scroll through some of the previous price action, and you can see a lot of the rotations coming right up into and falling down and coming right into these levels. In many cases, it comes to the tick, comes right to it, touches it right to the tick on the S&P futures, and then rotates right off of it, or comes to it to the upside and fails to the tick right off of it. Sometimes, obviously, it's not perfect. We're dealing with trading here, so they are going to peak through levels here and there. But let's go ahead and go all the way back to what's happened here just in the last few months. And you can see, again, all those levels that were super relevant in the price action we were just looking at are also extremely relevant going into the future, right? If they weren't relevant, then tell me why the high of yesterday or going into the overnight session for today's market was right there. Why did they sell off 1,000 points and then find support right here in the market? Why did they push all the way up to the all-time high which is somewhere over here. This was back a couple contracts ago. I have to build these levels out every time the contract rolls over. But we had a level sitting right up at the all-time high. They pushed again from 5,000 and 4,000 and wherever they were, and came all the way up. And what do you know? They failed. And this is again, this was on 2 contracts ago, but our level was sitting right here and they came up to the tick, pulled back, held it, pulled back, peeked through it, held it, held it, held it, and then that was it. The market never came back from there. Why did they stop right there and then start rejecting for, again, a multiple 1,000-point pullback? Well, because there's a major structure in the market in that area, or we built out these levels up into uncharted territories using another strategy that I have. So just very clear that if you can just find the major swing highs and lows in previous price action, you get a little clue for what could potentially happen in the future. Remember, this is all potential. There's no guarantees. The market is not going to necessarily hold a level just because in the past it held, right? So sometimes they travel through the levels, but in many cases, you're going to find that they come down right into these spots and get major rotations. And in some cases, I don't know if we have some good detail here, maybe right here, but you do have, and I'm not trying to cherry pick, I'm just showing you just random stuff. You do get this type of action where they kind of get above a level and then they kind of trade between them, right? And then they get back below it, they trade below it. They get back up above and they start trading in between those levels. Then they get down here and they hold this level for almost an entire overnight session and then bounce from it and then come down right to this level, hold it to the tick to come right up and test this level. So even inside the chop, inside of nearly a month of back and forth chop, all of the notable rotations are right here, and right here. There's no argument. It's just the facts. That's where the major rotations are. Those 4 discrete roadmap levels. Now, did it peak through right there? Yes, but every other time it held it basically to the tick. So you get the idea. If you can map out these major rotational areas, and I do have a lot more to it. It's not just fine rotations, right? There's also refinement and getting these levels down to the point where they are so accurate that on a short time frame chart, they're coming right to these levels and rotating right off of them, in some cases, right to the tick, right? So let's go ahead, and that's the short time frames there. So that's one piece of the puzzle. That's building out the scaffolding in the market. Now we need to start to consider the other piece of the puzzle, which is divergence signals. So if I have a nice hourly chart here, and I get an hourly bullish signal, this is down from the lows on April 6th, from this major scaffolding area in the market, maybe that's a clue we could bounce from here. Because now I have a divergence signal, and I don't have time to explain why divergence, how it works, how you identify it. I'm trying to get through this as quick as I can. If you find a divergence on as high a time frame as a 60-minute, and you're trading down on a 1-minute chart, a 512 tick chart, 3-minute chart, this is a clue that leading into the future, if we're testing a major scaffolding level in the market, and we have a nice high time frame signal, this could be the scene of the next rotation. Because I know that these levels in the past, of course not in a major sell-off during a Trump tariff announcement, but typically they're going to come into these areas and rotate off of them, or push up into them and rotate off of the back end, right? So if I have an hourly signal down here off a roadmap level, well, that might be a good clue that the market's going to rotate. Now we need to put it together with the surrounding timeframes or the timeframes above it. So for the last couple days, the market has been really messy. We have had some confluence, and obviously our hourly signals here have led a lot of these rotations, right? Hasn't led every single one, didn't lead the pullback from the roadmap level here, didn't lead the pullback from the roadmap level here, right? So it's not going to line up every time, but often it lines up right with the roadmap level, and you get a signal, a potential signal, I should say, and a potential, and it's lining up at a level, and then you have that potential for the rotation, right? So let's look at this. If we go back, and I'm going to go back up to just before the Trump tariff announcement happened, before the market got wild. And I want to look at kind of the two notable rotations in the market back at the end of mid-March. Right here, you can see that obviously we sold off right to this roadmap level, and then it bounced and came all the way up right into here and fell just in front of that major scaffolding. This right here, on the morning, or I should say on the morning of the 14th, because this had already happened at the end of the day, we were looking at a market that had a bullish signal on the hourly time frame right off our roadmap level. Great. But if we dial up to our 4-hour and go back to March 13th, right off that roadmap level, we also had a potential bullish signal on the 4-hour. Now, as I said, we were going into the open on the 14th here. We now have this, a picture perfect 4-hour bullish signal confirmed, an hourly bullish signal confirmed, and our daily time frame back on March 13th going into March 14th here was showing this, or at least the candlestick was maybe a little bit further down. And what did we see from the bottom there? Again, the roadmap level was coming across right there to the tip. Right, so as we came into the morning of March 14th, I had a higher low on my RBI. I had a lower low on my price. Price was rotating out, and I had a 4-hour and an hourly bullish signal from there. Well, what ended up happening going into March 14th, 15th, 16th, 17th, and then the continuation after that pullback? We got a 300-point bounce or more, right? From about 55.50 to 58.50, a 300-point bounce from something that we were anticipating back at the open on March 14th. Okay, so there's an example of putting all three time frames together, a multiple time frame divergence, all lining up right there off the scaffolding. It wasn't in the middle here somewhere. It was right off the scaffolding. And then we got the beginning of this push out. And notice, again, these roadmap levels, the market is respecting them. It comes up, it fails off this one, pulls back, went through this one, but if you look at what happened and zoom into that candlestick, it actually came right to it, pulled back. Then we broke out to this one, pulled back, broke out to this one, pulled back and bounced off of that one. Came up, pulled back off this one, came up to the next one. And these levels are all the levels that were built out on the previous contract. Remember, we were rolling over in March, somewhere around this time. So all these levels were shifted onto the new contract. So again, these levels are not just printed. I don't put these levels on here after this happened. These levels were all built out. And this is exactly how the market played out. And you can see this major level here ended up being a real strong level for practically an entire week before they broke out to the new high. So that brings us up here, and I'm trying to move fast because I think we're almost a half hour through the presentation. And that is, we get all the way up here, and we just start to fail out in front of the major scaffolding here. So this might be an example where, yeah, we're not sitting at the level perfectly. We had a short time frame level in between at 29, and that's basically what they used. They came to 29, kind of peeked into it, peeked in, and then that was it. But what happened here, more importantly, is if we go back to just about, say, March 26th, let me look at something here. So we had all this bearish stuff from the highs on our hourly chart as we went into the 26th. On our 4-hour, if we go up to that high now, we were also printing a nice clear look at this divergence signal up from the high of March 25th. Beautiful peak high, beautiful lower peak on RBI. And there's the test of that high going into the overnight on the 25th as we came into the 26th. So going into the beginning of the 26th here, we saw a nice 4-hour bearish signal confirmed. We had come down and closed down below it. We had our hourly bearish signals on every peak up into that swing. And on our daily time frame, what do you know? Beautiful bearish divergence as we were coming into that morning. So again, it's hard to kind of show you what it looked like before the market opened on the 26th there. But essentially what we had was a very clear bearish divergence starting to form from that high. My 4-hour had a ready official close signal from that high. We were pulling back, and I also had the hourly signal up from there as well. So when we came into the open on the 26th, whatever day that happened to be, I told my members, we can expect that the market is going to pull back based on those signals from the highs. Now, there was no guarantee that they were going to get through the scaffolding level. So the pullback right around the open made sense. But of course, we never know what's going to happen at the scaffolding. They could have came right in and tried to come back, but everything lined up there for a bearish pullback. And then what happened? We got ourselves a pretty hefty pullback from there, right? That was now from the highs. Let's say you got short from that roadmap level at 58, whatever, 5,800. That was then a 400-point pullback from there, or 300-point pullback. So you kind of get the picture here. On the daily, if we have a daily signal lining up and it agrees with my 4-hour and my hourly, well, shoot, now I have an area that makes sense for a big rotation. And here's all the daily signals, right? There's the all-time high signal up top. Here's the bullish for the bounce after we sold off after that all-time high in December. There's the failure going into January. There's the bullish one for the bounce. This is that one instance where we didn't get a super sexy bullish signal and then it popped. And, you know, technically you could probably say, hey, from that swing we have divergence, but I like local divergence. So really no signal there, but then bearish, bearish, pull back, pull back. You can see every major high and low, or almost everyone, had a daily signal. So if I know that, and I know that confluence between these two time frames gives me even more strength, the 4-hour and the hourly, and I have a roadmap level sitting at the point of rotation, more, you know, sexy right here, well, I might be looking at the beginning of a major market rotation. And that is exactly how I start to identify and find those areas. So that is an example of using the high time frames to find a major rotation in the market. But what about short time frames? You know, I mentioned in the presentation, if I'm looking for a short time frame entry into the market, I like my 3-minute and my 5/12 tick. So if I was to look for, I have 2 examples here just from today that we can look at. Now, obviously, it's been a weird market, but I think we have some good stuff here, not to really cherry pick, but just look at some real stuff that happened. So we have this right here. This is another level we use with my strategy. If you want to come over and learn about it, like I said, my website, sproadmap.com, should get you to all the information, to the YouTube channel and everything else. But we had a nice roadmap level here, not a scaffolding, but our major moving average. And when the market tested into that moving average today, just about a couple hours ago, right? This is around 2 p.m. and we're just sitting about 5 p.m. now. So about 3 hours ago, they traveled all the way up, hundreds of points, came right to this level. Well, what was going on a 3-minute chart when they were testing into that level? On the first test, we had a very clear bearish divergence. And on my 5/12, my short time frame entry scalp chart, we also had a very clear bearish divergence on that first test. So you can see there we peaked up, this peaked down. Our 3-minute also had that push to a new high. a lower high on RVI, and we got the first pullback from there. Now it was only from 26 down to 19. So 26 half to 19 half. So it was only 7 points. But you can make plenty of money in 7 points. In fact, my take profit typically is at 2 points as my first take profit. But in these big markets now where our ranges have now doubled or tripled, 5 points is now a great first take profit. So we would have made some money on there. But what ended up happening next was they peaked into the level, which is another concept we talk about, and they printed a second divergence on that new high. So when it peaked up on that second test right there, that's where we got our second short signal. So we got a signal, and on my 512, same thing, beautiful bearish divergence off that second swing. So you're right at a major roadmap level. We're in a wonky markets where things are breaking by a little bit more now. And we get this 3-minute signal. And then what happens is we fall right down through VWAP. So you had an opportunity there to go ahead and try to get in. Now, it wasn't perfect, but you had that opportunity right at the roadmap level. And if you were late to the party and your charts maybe look like this, well, now you had all the signs for a pullback. We were testing a roadmap level. In fact, the 3-minute was more so like that. We're testing the roadmap level. And I think I'm in the wrong area of the chart here. Oh, sorry about that. So we were testing it, and the whole time we were testing it up here. Sorry, I mixed up that second swing when it popped all the way back. But we were testing in. We had the 3-minute. We start the pullback here. If you miss that, so there's the signal. This is what you would have seen as we were starting to pull back from it, that 3-minute bearish signal. And then it started to turn, and you could have entered on the test of the FMA, right? And that's where you could get in. This is another part of the strategy. There's that previous swing. There's the FMA. Again, as far as risk goes, maybe 2 points. And then we get a major reversal from there, or at least a big enough reversal that you could have made 10, 20, 30, 40, 50 points, right? So pretty good stuff. And that was one example. I think I'm running out of time here, but there were a number of examples just in yesterday's market to look at. So, you know, we had stuff right around here as they came and failed all the way down right to the roadmap level, and it made a double bottom into the level for the bounce out. We had, this is what the 3-minute looked like at that time. Again, narrowing ourselves down to a major roadmap level, getting the test of the level with a 3-minute signal. There's this peak into the level with a 3-minute signal, and the 512 gave us this signal at the same time. Look at that beautiful bullish divergence. So from right there, a very narrow little discrete area of the chart, you know that a bounce would make sense because we have a strong scaffolding, we have a 3-minute signal, and then my 512 agrees as it starts to print. So from there, what do you know? You get yourself a trade right around 85, and they come all the way up into that first roadmap level, another 100 points away. And how much risk were you really taking on here? Maybe 2 or 3 points, or maybe just a point if you actually got in from the low. So, you know, this is the type of stuff I use to find really good areas in the chart to find rotations, limit your risk, and potentially set yourself up for a 50, 100-point move with very limited risk. So, or, you know, I'm not supposed to talk about risk, but, you know, areas where we don't have the market really traveling very far through a level, but ends up getting a big rotation where you can capitalize on the big move. Hopefully that is a little bit more friendly for NinjaTrader. So I feel like there's like 10 other things that I wanted to talk about, but we are getting towards the end of the webinar. So I would urge you guys to go to my website. You can join our Discord channel. I will be sharing some free stuff on there every Friday. So you'll be welcome to join our pre-market session and see us do this live. Let's go to the presentation and just to finish this out. And then if you guys have any questions, either go to my website, send them to my email, send them to my chat room, my chat on the website. I'll get back to you, or ask them in the NinjaTrader room right now so I can answer them. And while you're entering your questions, I'm going to go ahead and bring up the presentation to finish it out here. Just give me one moment if I can figure that out. Perfect. So every Friday morning, we do this live pre-market planning broadcast. We do it every morning, but I am welcoming people in for free to check it out. So you just have to join the Discord, go to our website. You can click on the link to join the Discord, and then there'll be a live charts trade room in there, like a voice room where you can go in and see my charts and hear me. I am giving a special offer for anyone who attends today. We're not doing any discounts. What I'm doing is I'm giving you a full month of coaching if you buy the course. And basically that's what I'm offering nowadays is purchase the course. It's going to give you 3 months of recordings. We did 2 recordings a week for 3 months. I don't even remember how many hours, just hours and hours of detail into every part of my strategy. So you get that, but then you also get our pre-market morning broadcast every day. So in order to join us in our broadcast, I'm asking you to purchase the course. And in doing so, you'll learn every detail of the course so you kind of understand what we're doing. And then you'll have access to our morning broadcast every day, lifetime, right? Until I stop doing this, and there's no plans of stopping. So you'll get in there, and then I'll give you this special offer. I will help coach you for an entire month. So that's that. I really feel like I could have spent a good extra half hour here, emptying these thoughts a little bit clearer and had more time to go into detail. But that's just the nature of the beast. You got to kind of get these things in as quick as possible. And if this raises any interest with you, it gives you that impetus to come over, go to the website, look at the YouTube, watch our presentations on YouTube, and make a decision. Does this make sense to learn this so that I can potentially find these major tops and bottoms? So do we have any questions right now? I believe I have a few minutes before we are done, maybe 5 minutes here. So if there are any questions, we can jump into those questions. If there isn't, for the next couple minutes, what I can do is we can look at some of the rotations on the chart here, going up to the higher time frames. And I will finish, maybe this is how I'll finish the presentation out, since there aren't any big questions. Give me one moment here. I'm trying to find my... Okay, perfect. So what I want to show you guys is when we made the all-time high back in December, we had quarterly signals for this pullback. In fact, this was a potential signal. This might end up becoming official. But the biggest rotation we've seen in the last few years had a quarterly signal from the high. It had a monthly signal from the high. It had a weekly signal from the high. And on the second high, when we came back, if everyone remembers, in February of this year, they tried to come back to the all-time high and failed out right in front of it, where we got another bearish weekly signal. So our highest time frames that we can find these signals on, they all printed a bearish signal when we made the all-time high. And as we rolled over going into February here, I told everybody that we were possibly in the midst of maybe a multiple 1,000-point pullback. So just the technicals alone were already cluing us in, again, going all the way up to the quarterly time frame. Look at that bearish divergence pattern. Oops. I think I just clicked something. Look at that beautiful bearish divergence pattern from the high on a quarterly time frame, 3 months. So coming into this new quarterly candlestick, we were holding down below 50% of the previous candlestick. So going into, well, I forget what this is, maybe the beginning of February or something, we couldn't even get through 50% of the previous quarterly candlestick. So we had even more clues that we were potentially going to get follow through from this signal. And that's, my friends, what happens with a quarterly signal. The last time we had a quarterly signal was the low of October of 2022. And then from there, we pushed 2,000, 2,300 points or whatever it happened to be, from 4,000, give or take, to just over 6,200. So quarterly signal led a 2,200 bounce, and it started to warn us about this major sell-off that we're currently in. And now here we are, over 1,000 points down. So quarterly, monthly, right? Monthly also gave us the bullish signal in October 22, and also gave us the bearish signal at the top of December of 2024. So you can see that these signals, when they follow through, can follow through for a heck of a lot of movement, right? And that's why we want to be aware of them. And when they all start to align together, it gives you a clue for a major rotation in the market. So the same thing happened, just FYI, guys, as we finish out here. Major signal back in 2020, right? I don't have it marked on the chart here, but when we came up to this new high, we actually got a divergence from the previous swing. There was a bearish signal on the monthly time frame. There was also a bearish signal on our weekly time frame going all the way back to 2020, if we can find it in here, wherever that was. I don't have enough data loaded. And there was a daily bearish signal from that high. And then just shortly after that, we had the shutdown for COVID, and then the market started to retrace, and then the major sell-off happened. So we had all the clues in the market from these higher time frames, from the monthly and the weekly, all the way back before the market actually rotated a week or two later. So again, same thing is happening right now from the all-time high. We have all these clues on the quarterly time frame, the monthly time frame, the weekly time frame for the bears. And as we rotated out right in the beginning of February, end of February here, we warned everybody, at least in my room, that this could be the beginning of a 1,000-point pullback. Maybe just 400 or 500 points, but potentially multiple thousands of points, right? And so here we are. Now, of course, the market is going to be really crazy here over the next few months as all this tariff negotiations work out between all the different countries, and potentially more brouhaha with China as they try to play hardball. So this could get really wonky. We could see a 2,000-point bounce because China follows through and loads their tariffs to zero or whatever. We could also see this market continue to sell off for some major corrections. And we have all the signs. Like I said, quarterly is the highest time frame I can look at, and it's got the sign for that potential, right? Remember, these are all potential signals, potential for follow through. Sometimes they don't get much follow through. We get the signal, it starts to kind of go, and then comes right back. And that can happen on the bullish side or on the bearish side. But that is it, my friends. I think this is a great way to finish the presentation. Just a month ago, I was warning everybody that we were potentially in the beginning of a 1,000-point or more pullback. And now here we find ourselves, 6,200, maybe 6,000 at the time, is now made a low at 4,800, or more than 1,000 points down. Again, just using these signals, not using anything else. So that is it. I don't see any questions in the room. So hopefully I did my job today. But again, I do want to, the link for my Discord is on the website. So sproadmap.com. It doesn't really get much easier than that. Go to sproadmap.com and I'll pull up this right here one last time. sproadmap.com. It's got the link to the Discord. We've got info on joining the service, buying the course, and then the links to everything, links to YouTube. If you go to my YouTube, I've got a lot of free content, right? I've been uploading stuff for probably 4 or 5 years now. So plenty of stuff to go in and check out. And hope you guys have a great day. Be careful out there over the next few months as all this tariff brouhaha continues to happen. And thanks again for those that decided to be here with me today. And thank you to NinjaTrader and Chris for helping out. So that is it, my friends. Have a great day.
Thanks again, Justin, for taking the time to share with us today. Everyone in attendance will receive an on-demand recording of today's event, so keep an eye out for that email. If you enjoyed today's session, we hope you'll join us for future webinars. Follow us on social media for alerts about upcoming events and other NinjaTrader ecosystem news. We would like to remind you that the information provided in this was that of S&P Roadmap and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us at NinjaTrader Ecosystem.